Welcome back, everybody.
Hi, Doug. Good
Hey,
morning.
John.
Hi.
How you doing?
I'm pretty well. Yeah, thank you. And how about yourself?
Same. I'm doing pretty well. It's going to be an interesting episode, to say the least.
Yeah, a
Uh,
little bit of a surprise, probably for some. Yep.
yeah. So this will be my final episode for the foreseeable future, and I had a chat with John about this last week. I've really enjoyed doing this show and engaging with our listeners, and mainly talking with John about this topic that I love talking about. But with a young toddler, a busy work life, and a new kid coming in less than 2 months, it just was becoming difficult to find the time to do it and to really devote the time to doing it. And I have to say, it was a pretty difficult decision for me. Um,
Mm.
and like we talked about, John, it was becoming one of those things where it's like, oh man, finding the time was becoming, and I don't want to use the word burden, right? Because I always enjoyed doing it, but I didn't want it to turn into that because I always love sitting down and chatting about this stuff with you.
Yep.
And so yeah, I just wanted to take the opportunity today to express my deep gratitude to everybody that's been listening to John and I chat about our thoughts on infinite banking over the last year. It's been a lot of fun.
Yeah. It's always been pretty easy. So, because we both enjoy it, the topic, and it became easy for you and I to do these shows. At the beginning, we spent a little bit more time, thinking about what we'd say, maybe some show notes that we could look at, talking points, kind of stuff. But even that was, you know, minimal, and yeah, it became so easy. And I'm gonna miss that because I don't know that I can replace it, if I continue on, whether I bring on another person to, because it's nice. I like the conversational
Mm.
thing, but yeah, it doesn't mean it's always going to work. And it definitely, for you and I, and hopefully people got something out of this. um, yeah, it was easy. And yeah, when it does become a burden, in a sense, meaning you have to squeeze it in with the rest of your life. Yeah, it's not as much fun because it's working on you even when you're not doing it, right? Because you're thinking about it and you're like, I gotta get that done, and da, da,
Hmm.
da, the gotta stuff. And we don't want too much gotta, we want to, right? And I'm sure you, if you had the time, felt like the time was still available, then you would have continued. And yeah, so
Oh yeah.
I do want to say that it was your idea to do this.
Mm.
You brought it up to me, and I think, the first time it was like, yeah, I think that sounds, but you might recall better exactly how I responded. And then I think you brought it up again, like, yeah, you really want to do this? And I was like, yeah, I think. And then you did all the work of the research on what platform to use, and the devices that, for when we got together, we have the microphones, and yeah, the whole setup, in the so-called studio downstairs.
My basement studio,
And
yes.
yeah, and those were really enjoyable. If we haven't said it or people haven't picked up on it, we would do sometimes, two, three, four. I think maybe one day we even did 5 episodes, but I'm not sure. All back to back to back between bathroom breaks and water breaks. And
Yeah, it was a bathroom break at least in between every episode.
yeah, and that always felt good too. It didn't take much for us to just have something to say about all those those episodes, and so I really appreciate you wanting to do it with me. Um, and it's been a lot of fun, and it's been good. I certainly know for some of my clients that have given me feedback that it's been good. It helps them, um, think about things that maybe they had forgot about or never thought of before,
Mm,
maybe that I've never shared, that then you and I shared, and yeah, it helped them remind themselves of what this was and maybe why they did it and why they are doing it, and that is very helpful as you go forward because there could be a little um, you know, backtracking like, is this an expense? Oh no, it isn't actually. This is me building this asset's value that is so powerful because of the flexibility of the tool of the asset itself. It's unlike anything else. So it really truly is. That's not just talking. It's unlike any other asset that I'm aware of.
I
So
I will concur with that. I was reflecting on, what I would want to talk about today. And I wanted to just kind of talk a little bit about how this is still such a crucial aspect to my family's financial security. I look at, you know, mounting debt in the country, overvalued assets, people having major FOMO on, missing out on, run up in the S&P and things like that. And I don't know, and I could be wrong, right? I mean, everybody's always shouting about a major market crash coming, but historically, when things build up like this, um, there is some sort of downturn, and I feel like this one could be rather significant at some point. And I think about the importance of not having to participate in that if and when it does happen. And I feel so secure in my annual payments to my insurance policies that are just steadily going up, that are not correlated with that, and that are just going to continue on as if nothing's happening, if and when something does happen. And, you know, not subjecting me to the tortures of watching things go up and down and being tied to the headlines and could this happen and should I do this? And like John mentioned, it's sometimes it can be seem a little bit unsexy, but paying those premiums and having those dollars available is really taking action. It's taking action by having that dry powder available to use for life expenses or taking advantage of those downturns. And just something kind of cool that I'd like to share that's going to happen is my wife is at a new company as of I think about 2 years ago. A great company. They pay her a lot more than her previous company did, which we enjoy. Um, but they have a very poor maternal leave policy. So we have another child due end of July, early August, and she wants to spend, at least 3 months at home, not working, which I fully support. And I think the company covers 2 weeks. It's pretty bad, right? Um,
mhm.
yeah, and of course she can take FMLA for up to 3 months, so her job's not in jeopardy, but she's going to file for, I think, short-term disability and get some money for that. But the end result is,
Yep.
we might need to pull some money to cover, the lifestyle that we want to have at that point. We might fly down to Mexico to introduce the baby to her side of the family during that
Mm.
period, and we want to
Mhm.
continue living the same lifestyle that we live now. And it's going to be so nice for me to be able to take a policy loan if needed to cover that in the short term rather than thinking about having to deplete savings.
Yeah, yeah, and often people don't, as we've talked about, they don't have the savings, right? They don't, so they go into the credit cards if they
Mm-hmm.
have any limit available, um, and that's like a mind twister, right? Because I've used credit cards in my life, and I've overused them in my life, and it's like you're utilizing something and trying to turn your mind off that you've actually utilized it. It's because you just went into
Right.
debt, right? And it's quite a different feeling uh, to do it with your policy. It doesn't seem like an unwise thing to do,
Well, no, I
to
mean
leverage
there's
your
no
cash
minimum
balance.
payments due. You're also not, you're also not getting charged like 30% interest like you would with a credit card, right? Um,
Yeah.
so yeah, and you're right. Most people would just go into debt, the vast majority of Americans. But I think our audience base, a lot of them are probably savers if they're interested in this. And even
Oh,
if I
sure.
compare how I used to be before discovering IBC, we were still savers. A lot of our money was going into the stock market. We did have money in savings, but I was always trying to keep up with inflation and all that kind of stuff. So in that event, I would have either had to sell stocks and be worried about, am I selling this at a good time, long or short-term capital gains, or I would have had to deplete our savings and interrupt the compounding process. So either way there, I would have been interrupting some sort of compounding process. And that would have bothered
Hmm.
me, right? Because we work hard to save and
Yep.
you're messing with that. And in this
Yeah.
scenario, I don't have to worry about that. Like I know that when she's back, we're gonna be back to the same income levels that we always are, and paying off a policy loan, if we even need to take it, is going to be no problem. And I have the flexibility of just taking it and leaving it alone for a few months. So it's just simple things like that that have really improved my life implementing this. And I think I mentioned that, when she switched to this job, we had some time off in between those jobs because she was unhappy with her previous job, and we were able to utilize our policies in that event as well. It was just like a real peace of mind thing for us. So,
Yeah. No, it's so true. And um, to add to your story, is I was updating some basically will type
mm,
information, uh, assets and key contacts and key information for my children if I pass away. I'm going on a trip for a few days next week. I got to get on a plane. Every time I get on a plane, I'm like, oh, geez, I haven't got everything up to date
oh, in
yet.
case the plane goes down.
Yeah, the plane goes down. I mean, yeah, and I also have an accidental death policy on myself that I bought a number of years
Oh,
ago. And, I'm like, well, yeah, but they're going to have to go jump through a bunch of hoops. So I better get all this stuff updated. But as I was putting down some numbers, it's just trying to make it as easy as you can. This is, again, I don't love talking about death, and especially mine.
sure.
But it is comforting, right, to say, oh, they don't, like, what if I had, what if I had taken some credit card debt or commercial lender debt to do whatever? Yes, if I still had life insurance, they would get the proceeds. But if what I wanted to go to them, then they'd have to be, figuring out how to pay off these debts if that's what they wanted to do. If that's what they, of course, everybody has their choices in life. But let's say they saw all this, this debt, whatever it was, they're going to have to divvy it up between the three of them. It's silly. But when I was writing down information, I do have some outstanding loans on a couple of my policies, and but I basically said this is what's available for the death benefit after those are paid off, and it's all done in one fell swoop. I mean, they don't have to do anything with the insurance company. The insurance company just takes that loan balance
Mm-hmm.
off and just writes a check to the kids. The percentages, a third, a third, a third kind of thing, the way I have it set up, and it's done. It's trying to make it
Yeah,
as clean as possible for
sure.
them, and yeah, so it's just kind of comforting when you
It is. And they won't have to hire an
do the
accountant to deal with
do.
that because it's not a taxable event.
Right, right. No,
It's just, oh,
exactly. It's like, I mean, it's even shocking to people,
yeah.
right? It's like, what? I don't have to pay taxes on
Well,
that? Like,
and it's shocking too
no.
when you look at a lot of the policies that John and I design on for people, our listeners, just other clients. Some of these people are going to have, staggeringly high death benefits when they pass away. We're talking millions, potentially tens of millions of dollars, and it's not a taxable event. I don't know of any other,
Yeah, it
I
doesn't
don't know of
go
any other
in.
way to pass on wealth like that without really serious financial engineering on the part of lawyers and accountants setting up complicated trusts. And there's still a lot of things that need to be adhered to when disbursements are made, uh, kind of going that route to make sure that you're not, you know, incurring a taxable event. But you could have someone that doesn't have that. They don't have a trust set up, simple W-2 income. They have been making sizable policy premiums their whole life since let's say their 20s, 30s, 40s. And if they pass away at a ripe old age, then they don't have a ton of loans outstanding. You have someone that's just going to get a multi-million dollar check. It's pretty
Yeah,
crazy.
exactly. Yeah, yeah. And yeah, interesting, right? Because, you could be taking not just for your own, maybe not even for your own sort of cash flow purposes. You're 100 years old, maybe you still got all your wits and faculties with you, and but it doesn't matter whether you're 100 or 60 or anywhere in between. You mean you can start distributing some of the money and start just like people do. They start giving, basically gifting family members
Hmm.
something, and you could really start up policies through the cash flow coming out of your policy. You could be cash flowing somebody else's premiums, your children or what have you, and you could have started that a long time ago. But yeah, I mean, they really have all these different options, and why not, like people say, well, let me start distributing my assets to my children while I'm alive. I actually want to see them
Yep.
enjoy it, right? And you can do all kinds of different scenarios and strategies of utilizing this um, really powerful asset that you own. And people just don't
No,
think of it as
they
an
don't.
asset. They
No.
really don't.
And
And
that's
it
kind of
is.
the whole point of
It's
this podcast, right? That we want to, well, people think of it as life insurance, which of course it is. But it's an
yeah.
asset to be used up until that point that the insured dies. Um, I love what you just said about you know, allowing your kids or whoever else to enjoy some of that while, one of the issues I see a lot is that wealth gets transferred when people die. So you might have money going to a kid that's in their 60s or 70s, and families tend to be similar in kind of how they are financially generationally generation to generation. Not always, but people that are savers tend to have kids that are savers and so on and so forth. So a lot of times you have a parent that has some wealth that passes away, they give it to their kid when they're mid 60s, 70s, and that person already has plenty of money and they don't really need that money at that point. But they really could have used the money when they were in their 40s. And just
Yep.
like you were saying, this allows people to kind of intentionally distribute that maybe earlier on. And there's a great book. I don't know if you've read it, John, but it really kind of reshaped how I looked at this, called Die with Zero.
No, I don't. I'm familiar, I think, with the author,
Highly
but
recommend
no.
it, and highly
No.
recommend to any of our listeners. It's just a great way at um, it changed my point of view on that subject and the importance of utilizing money earlier on in life. As the younger we are, the more we can do, right? As we get older, we tend to be able to do less things physically. We tend to have less of a desire to go do certain things. So the time value of younger years is ostensibly higher. And yet most people save up all their money and don't spend on experiences until they're much older, when they can't enjoy it as much, and when they may, to go back to your friend, they might pass away before that fabled retirement date or something like that. So, anyways, a really good book that I would recommend to our listeners.
Yeah, I mean, I don't want to spend a lot of time on it. It's really not necessarily IBC focused, right? But one of the things that, people start considering once they reach 62 is whether they should take the Social Security benefit, income benefit, that they paid into. And my friend Kevin hemmed and hawed about whether he was going to fill out all the online stuff for it. And, he was already of age to start collecting, but part of the communication out in the world is to, hey, if you wait till, full retirement age, or, wait till 67, or even put it off to 70 before you start collecting, your check's going to be that much bigger. And one of the sticking points for him was, I'm afraid that I'm going to make over the amount, where now, for every, I think for every, $2 that I draw in Social Security income, $1 of it will be taxed, meaning that $1 will be
Mm,
taxable, right? It's not the whole dollar, right? But, let's just say, and I don't remember exactly, but let's just say he had made, 25,000 for the first 3 months of this year. One of the questions it was asking was, what do you expect to make for the rest of the year? And I said, well, if you're doing it, say on March 31st, you're filling out the paperwork, I would say 25,000. That's what I expect to make. You can go in and change that if you make, let's just say you make 25,000 a quarter. So at the end of the year, you've made 100. But I said, Kevin, you don't know, right? You don't know whether you're going to fall ill and never work again. So don't base it on that, because they'll start basing, what you're going to get, you know, paid, what they're going to be looking for taxable stuff and all this. And I just, it's always this tax man that seems to get into people's heads. And that's why I loved this idea. Yep, let me get it done now. Let me pay taxes now. And everything that ever gets streamed out of this policy or leveraged out of this policy, I'll never pay taxes on that. I can leverage it, I can use it to do various things in my life. And, I don't have to think about the tax ramifications. And that delayed him, and of course, he didn't even make it. He was going to be 64 at the middle of this month. He didn't make it, and he never collected, basically, let's say for 2 years. And 2 years, he could have used, let's just say it was $2,000 a month. I mean, that's
mm,
$48,000 plus whatever it might have done for him in his life, right? Or done for his children, or right, he had 3 children. So, this tool is Nelson. I watched something this morning that Nelson Nash was doing on a video, and this, he does talk about taking the stress off. This is a low
it
stress
is.
thing. It doesn't mean stress is eliminated from life, but it definitely lowers a lot of the financial stress, and it's a part of it is it takes away that tax man um, forever with the money that's leverageable within the
Yes.
policy.
Yeah,
So
I don't think most people realize that, well, what about a Roth account? Well, yeah, you won't pay taxes, but it factors into your Social Security calculation in terms of taxes. So that income, like if you go and you take 100 grand from your Roth policy that year, I mean your Roth policy, your Roth account, you're gonna you're gonna pay
yeah,
taxes on your Social Security distributions as if you took $100,000 worth of income. You won't pay income tax, but you're still going to pay a pretty good amount of taxes on that Social Security benefit. Whereas with distributions from a policy, you don't. And of course, Brian Bloom in his books does a really good job of talking about that. And these are a lot of the benefits that people don't think about. They don't think about the ramifications that taxes have throughout their life, and they don't understand that making a change in how we get taxed for the rest of our lives is one of the greatest rates of return that you can possibly achieve, and is a lot more substantial than trying to chase an extra few percent out in the market or something like that. I mean, we're talking, hundreds of thousands of dollars, if not millions of dollars for most people over the course of a lifetime. And yeah, it's a great point, John. So,
oh, thanks for adding to that, because that is the thing. It's I don't have to think about it. It's a one and done. I do it when I'm putting it in. I pay, I've already paid taxes on that money, and I don't have to always be, you know, again, it's this idea that people would get this information, say, from their accountant or their bookkeeper or their CPA. And of course, Brian Bloom, you just mentioned, Confessions of a CPA, who also became a life insurance agent and did it exclusively up to well, he's still doing it. Um, this was something he knew that most accountants, tax professionals are not even going to be aware of. They don't understand whole life, and they certainly don't. Most, there's a couple, including him, that know something about the infinite banking concept and buy into it. Buy into it. Understand it enough to, yeah, support it, be advocates for it. But there's very, very few. I mean, it's not even 1%. It's probably not even 1% of 1% that know anything about it. So you'd think that they would, um, but that's not their bailiwick. That's
no, it's
not
people that are also tax
their.
strategists that get it, right? But the typical CPAs that people use, they do not. Um, if you look at like a financial planning firm that has an in-house tax strategist and in-house tax team for primarily centered around wealthier clients, they almost all utilize whole life insurance as like a tax saving strategy. But that's not what most people aren't using firms like that because they can't afford that or it's not applicable in their life. So it's funny how this hasn't like kind of made its way down to the middle class. It's really unfortunate.
It is, and hopefully, people that take it on. Uh, I know that my clients talk about when they mention it to friends and family, and very few times can they get somebody to listen long enough. Because once they say something about life insurance, they're a little bit turned off or think they already know what that is, and or hey, I've already got a financial person, or hey, I've had some success in the market or with real estate or whatever. But this isn't about all those investments. This is you taking control of the banking
Hmm.
function in your life. And it's not just about this year or 5 years from now. This is for 30 years from now in your life. This is for after you pass, from your children's life, whoever ends up with the proceeds, right? Um, and I say, like, I'll jump from there to an interview I did with Brian Bloom that, I think his very first client was his brother, and I think a little bit younger brother, and his brother, um, kind of understood what Brian was helping him do, but he passed away, I think, in his
Mm,
early 50s, and those proceeds that were, planned to be utilized, say, in his retirement, the brother's retirement, ended up paying for housing for his mom. It changed her experience. Of course, she lost her son, but he left her a gift of the death benefit, and it drastically changed the conditions, quality of the housing and so forth that she was able to experience late in her life. So, this is not just here and now, and that's back to your fear of missing out, the FOMO thing. Everybody's thinking about today only because, yeah, we're trying to make it day to day, week to week, month to month, year to year. And yeah, this is a hugely powerful tool while we're living and once we pass on.
amen.
So, amen. Yeah. Doug, I'm gonna really miss doing this, and maybe someday
Yeah.
we'll regroup and
Or if you
do it
continue
again.
on with
But
someone else, maybe
I'm
I can
sure.
come on as a guest interviewer at some point. Interviewee.
I'd love that. Yeah, of course.
But
Yeah, 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 yeah. Exactly.
right,
No
just show
stress
up.
on you.
But
Just
in all
show up.
seriousness, to our listeners, thank you very much for putting up with John and I and for having fun alongside us. It's been a pleasure. And perhaps you'll hear more from us at some point or more from John and someone else. But it's been a pleasure to provide you with content over the last year, truly.
Yeah, and thank you, Doug,
Same to
for
you,
this
John.
experience. It's been
Yeah, you're a
it's
great
been all
guy, and
great.
it's
So
fun to
yeah,
talk with you about
thank
these
you.
things. So
You
thank you.
too. It sure is. All
Yeah,
right.
and
Yeah.
our
Thanks,
episodes will
Doug.
still be
Doug.
out there. So anybody listening, if you still want to reach out to John and I, the contact info listed on the episodes is still good. We'll still be doing our thing, helping people, and we look forward to hearing from some more of you.
Sounds great.